So traders, right now we are getting a massive cycle repeat of what actually happened in the 70s when it comes to markets, gold, silver, mining stocks, and even the inflation. This is a identical repeat of what happened in the early 70s. And so if that's the case, let's actually see what actually happened, what panned out through the rest of the 70s, and how can we take advantage of that for positioning ourselves for buying opportunities and long-term investment opportunities. And so that's this whole video here is about the long-term cycles, what's happening with inflation. And this is just history is repeating itself. So similar things are likely to happen. And I want to share with you my view when it comes to the inflation, the yield curve, the coming recession, the bottom in the stock market, and so on and so forth. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, I'm actually giving away free access to my breakthrough trading course. Very first thing in the description, guys. There's actually 5 phases that goes into that. There's about, 4 or 5 hours worth of I think, maybe more, of training that goes into the 5 phases of what goes into the foundations, chart reading, trading systems, trade management, and so much more, right? And mindset, okay? Very first link in the description. Go get that, guys, before I start. I used to charge like $500 for it, but now I'm just giving it away for free to help you out. Now, let's actually go and have a look at the good old what actually happened in the 70s. And the reason why I'm bringing this up right now is because I really want to share with some things with you that I'm looking at right now, and how you can position yourself, how we can look at not just today. And I'm going to get to a question also. There's a question that actually happened when it comes to why is the stock market rallying when they're pulling money out of the markets? Why is that? I'm going to get to that question. And so I really appreciate that question as well too. So the whole thing that I'm noticing right now is that a lot of the times, one of the worst mistakes we can do is we can just continue focusing on, oh, today went up today. Oh my goodness, right? And a lot of the times, what do? We completely forget the bigger picture, right? So I'm going to share with you the inflation, the yield curves, everything today. So one of the biggest mistakes, right, is we don't see the forest from the trees, so to speak. Especially even if we're trading, right? Even if we're trading and we're looking at, say, the Nasdaq as an example, right? We're trading and we're looking at the Nasdaq. So if we're trading or looking at the Nasdaq or even the ES here, okay? So look at this here. So the market goes up, market goes down, market goes up. But if we're looking too close, we can't see the big cycles of where everything is in play, right? So you can just look for the last 1 or 2 months or 3 months and look at this last rise like, oh, the stock market's in a bullish trend here. But is it really, right? We have these small movements in big macro cycles. So how we see from a technical analysis point of view, then I'm going to get to the inflation, yield curve, and all that sort of stuff, and what's likely to happen moving forward, the best opportunities to buy, and so on and so forth, right? So I've got a lot to share with you today. So from a technical analysis point of view, and even a long-term point of view of looking at, the reason why I'm bringing this up right now, guys, is because I think this is a good analogy of what most people do, right? They focus on the now, here and now, right, today, but they forget to look at the bigger picture, and the bigger picture helps them stay in tune with what the really big picture is actually, what's the big picture really telling us, okay? And so that analogy is like looking at the stock market for the last few months and then using your analysis from that, but completely forgetting to look at the weekly chart. So we're looking at the daily chart ES right now, okay? If we look at the weekly charts though, look at this here. So the daily charts, all we see is, oh, the daily charts are actually in an upward trend. Here we go, upward trend. But that's the small picture, right? Small picture, big picture, small picture, big picture, okay? And again, the reason why I'm talking about this is because the inflation rate number we just got, and we've been getting for the last few numbers, is showing exactly what actually happened back in the 70s. So this is exactly in line. So therefore, I'm going to tell you probably what's likely to happen moving forward if history keeps repeating itself. And therefore, we can take advantage of the cycles and have really good opportunities to buy the markets and make lots of money, right? That's what it's all about. So we could see that this whole analogy with this market through here, but one of the worst mistakes that people make, and even back through here, right? Look at this here. When this market actually had this movement up, why did it fail? Most people are like, oh my goodness, here we go. It's stepping up. It's stepping up. We're getting really big upward movements. Here we go, right? Yeehaw, right? Here we go. But why did this fail, right? And then why did we just get this here? Because we're not seeing the forest from the trees, right? And so what is that? That's the weekly charts now. The weekly chart is what? the overall major true trend that we always need to keep an eye on, the big cycle, the big macro cycles of where we're at in the markets. So if you look at the daily charts, we've got this bit of a rally through here. But if we look at the weekly charts, what's the big forest from the trees telling us? And let's just use simple trend analysis. Down, up, lower high, down, up, lower high, down, up. So as you can see, every time we got these strong rallies in the markets, and this is also to answer a question from someone that actually gave me. Let me actually share this with you here. So I'll share that in a minute, but I'll share that question in just a minute there. But every time we get a rally, the market then sells off. Now, why is that? Because what? The trend is your friend, right? And as long as we keep making these lower highs, the market is still in a downward trend. And trying to predict, trying to find a bottom here is very risky, because just like here, you are wrong, just like here we're wrong, and just like here, you may be wrong, right? So that's where probability says, wait for the market to start to turn around. Wait, if we are going to start to see something like this, and then we're going to start to turn around like something like that, right? Wait for the turnaround first. Don't try and say, well, the bottom's in right now. Really? Or was the bottom in there? Or is the bottom in there? Is the bottom in there? Is the bottom in there? You see what I'm saying there, right? Don't try and capture bottoms. But this is the forest from the trees. So most people focus on this weekly chart here, which was that up move I shared with you just a minute ago. And then guess what? And then the market actually had a sell off, because the overall big picture is what's most important, right? So we look at the small picture, what's going on right now from a technical analysis point. But this is also going to help you understand why. Like if you're trying to go long right now, the probability is that it's going to roll over again. Why? Because the trend is still down. And most of the time, the trend is going to continue that fashion there. Makes sense? So, and if I go and have a look at a question that I got from, let's actually bring this up through here. Right, I'm going to bring this question up here that I got, and then I'm going to get to the inflation rate and the cycles and just et cetera, right? So this here was the actual, the question that I got through here. And this actually really, a lot of people don't understand this here, okay? So this was the question here from Sunshine and Happiness. Replied, John, how I agree. So what he was agreeing to, someone actually said to me in a comment section, they said to me, John, nothing happens 100% of the time. If so, we'd all be rich. And my comment to that was, in fact, actually, I'll just take a screenshot of that entire thing there. So I actually I'll share that with you here, right? So let's actually take a screenshot of that entire read through there. Okay. So this here is what he was saying. Now, just so you can get the full context of this question here. Okay. Let's actually zoom in a bit more. So look at this here. So he said, nothing happens every time, predictable. If so, we'd all be rich. And then I said, every time they print money, the market goes up. This has happened 100% of the time. A little smiley face, right? A little bit of smiley face. So, and then Sunshine said, I agree. So supposedly they're pulling money out now. Why is the market going up when they are tightening? I'm confused. Thank you for your video. I'm a new subscriber here, et cetera, et cetera. And so Sunshine and Happiness, thank you for that question. The one thing you got to understand about the markets is the markets don't just go straight down. Let's look at the reality of what a bear market is, right? It stair steps down. Now, this could happen for a lot of reasons. This could happen because a lot of people are starting to buy here because they think it's really, really good, right? And they're buying there. Or this could also happen because a lot of people who are short the market, if they start to short the market here, they start to buy back their position, and then the market goes up, and then they start to look for a short again, right? So there's a few reasons why that happens. But just remember, when the market goes down, it stair steps down. It doesn't just go straight down. Just because they're pulling money out, or even just because they put money in, doesn't mean it just goes straight up. When they start to do QE, what happens? We go through a nice, good bull market, right? A bull market is the higher lows, the pullbacks, and so on and so forth. They're tightening now, pulling money out, raising interest rates, stuff like that. So what's happening? We go through these stair steps here. And this is what the market does, though. For the Sunshine Happiness, is that for the amateur traders who don't understand this, they get fooled by looking at just that short term, as I've been speaking about today. The short-term analysis, they get fooled by looking at that. And then they completely miss what the overall picture is, and that's where most of them get absolutely destroyed. And that's the reason why I've come out recently and said this is just another sucker rally. And guess probably tomorrow's video is going to be called that, right? Few more suckers to go and then they're going to dump it on your ass, right? So I hope that makes sense. So let's actually look at this here. So let's actually go look at the actual inflation rate number. So let's go to the inflation rate here and look at this inflation rate number, right? So 9, 8.5, 8.3, 8.2, 7.7. Look at this here. We went up, and now we're starting to come down, right? So we're starting to see that downward projection in that. But look at this here. Check this out, okay? Check this out. So the inflation rate is still coming down, okay? We're seeing this right now. And if we have a look at the recession indicator that we're looking at, so let's actually go, I'll go back to here. So what I'm looking at right now is guru.com / yield curve, okay? And if we have a look at the recession indicator simply says that it's on its way, right? So it may be another 5 or 6 months down the road, but probably sometime next year we're going to be in that. And how you can see that is by simply looking at this yield curve, and you can see here that the history of the 10 and 2 year means every time it went negative, that was the inverted yield curve, but it wasn't then, right? It was another, maybe 6, 12 months, maybe a bit longer. Then the gray bar happened, which was the recession. The negative, then it went back, when the yield curve says, yes, we're going to recession, but then guess what? It's not until we get back in the positive that we get this here. Recession, back in the positive, negative, back in the positive, recession, and now we're in the negative. So once we get back in the positive, guess what? We're probably going to get another gray bar, right? So that's happening. So if that's happening and the inflation is coming down, recession is deflation. And that's what we're starting to get right now, right? We're starting to get the deflation in the inflation number, right? We're starting to get that. So if we have a look at, say, the 10-year right now, we can see we're starting to peak out. So we may not get down to 2, or we probably will get back down to maybe 2 or maybe even 4 around there, right? Because you can see there's actually a lot of, right? There's a lot of sort of, I know this sounds really weird, right? Looking at it, using charting analysis on the inflation number. John, are you an idiot or what? No, right? This actually works, right? The resistance here is 2, so the market's probably going to come down and find support at 2. It's like, some people watching this video right now saying, John, you have completely lost your mind. You're using technical analysis on an inflation number? Yes, I am, right? So, and I love it, right? So, look at this here. But if I go to my maximum data, look at this here. This is where the inflation really starts to kick in and probably what's likely to happen moving forward. And again, the whole purpose of this is how do we see the forest from the trees? Remember I talked before about looking at the short-term picture on the daily charts for the last few months. You're missing the big picture for the last few years of what's really going on, right? Same thing for what's happening right now. We know we're going to go into recession, so there's going to be deflation in the markets. And we know history repeats itself, and the very last time that actually had this sort of similar inflation was back in the 70s. And it's actually happening right now, this same sort of thing. So the same cause-effect relationships are happening as we speak right now that happened back in the 70s. And so therefore, if it keeps repeating, we can see the future and prepare ourselves to get ready for a really good buying opportunity and make a whole bunch of money, right? That's all I really want for you guys. This whole video here is to help you see what's happening for the rest of this decade, so we can see the big macro cycles and we can watch these things slowly unfold every single day. Make sense? So look at this here. So we can see here, look at this. So this is 1960 here, and this is 1970 right here. What actually happened back in this is the 1970s right here, right? Middle, so you get 1960s, 1980s, right? And then we go to the 1960s. What actually happened? We had what? We actually had a deflationary period. Oh, what actually happened in 2020? We actually went through a deflationary period. You know, it was the vid, yes, and all that sort of stuff. But guess what? It doesn't matter why it happened. It just happened, right? So, and then guess what happened? Then we had out of control inflation. Oh my goodness, it's so bad, so bad. Oh my goodness, so bad, so bad. Oh my goodness, inflation. You know, and they're probably saying the same thing they're doing right now that as they did back in the 70s, right? History is repeating itself. Oh my goodness, we're going to start to raise interest rates. Inflation is so bad, it's so bad. And then guess what happened? Inflation rate came down to where? Oh, isn't that funny? Down to the next. So this resistance became support on the inflation. Ah, I thought technical analysis didn't work on the inflation number. Love it. Right. So then we went through a deflation, and then guess what? Went through a recession, et cetera, et cetera. Now this was, if this was 1970s here, right? 70. This here is probably 75, right? So this here was around about 75, 76 period as the market kept coming down. Okay. So as the inflation number kept coming down, guess what? Went through a recession, and then they did something here. It doesn't matter. You call it QE, you call it cutting interest rates, you call it whatever you want to call it, but they did something to cause the inflation to spike even higher than last time. It went, so it actually made what? It made a higher high at 1980. With me so far? Okay, so 1970, deflation versus then inflation. Deflation, then inflation. What's come next? The next one is what? Deflation, right? We come back down to, because we know we're going into a recession. We know the deflation is already happening. We're seeing the last few numbers coming down. It's kicking in right now. This is exactly what's happening here. And then we're going to go through the what? We're going to go through a recession. And then just like they did back here in the 1975s, now I don't know when that's going to be, right? We don't know when that's going to be, when the recession kicks in, and when they do whatever they're going to do, which is going to be probably printing money. They're going to do the same thing in the next couple of years. They're going to do the same thing they did in the 2020 COVID situation, right? So if they do what they're going to do back in the COVID situation, what's likely to happen? I guess if you do the same thing, you get the same results. Oh yeah. But what happens if they do what they do back in the 2020 vid situation, right? And what happens if they do that, but they do it another 4 or 5 times? So if they do that, that's the reason why we had a much higher inflation rate, because they probably would have put more money in, et cetera, et cetera, et cetera, et cetera, which caused the second half of the decade inflationary boom. With me so far? Fantastic. Right. So we can see that through there. And then we had the ultimate crash back in the 80s. So if history does repeat itself over the next couple of years, as the markets continues to pull back and we continue to go into the recession, we continue to get the weakest in the markets, we're going to go into a recession, right? Remember I said before, if we go back to the yield curve, the seeds have sown. All we now need is what? For this to get back into the pository, and then we're going to see what? See this gray bar? Recession. Gray bar, recession, gray bar, recession. Then they're going to come out, and then they're going to jack it all up, right? And then we're going to see the inflation number do something like that, right? So we're probably likely to see a 15, maybe even a 20 print up there. So we're probably going to get a much, much, much higher number in the second half of this decade. Now, how can we take advantage of that? Let's actually see here, okay? So first off, what were the asset prices that did well back in the 2020 situation, right? When they did the whole bunch of printing of money, what actually did well, right? Commodity prices, such as food commodity prices. Even gold actually went for a big move there for a while, right? Gold actually went for a big move. Commodity prices went, et cetera, right? Or they all went for a big move. Okay, so if that was the case, interesting. I wonder what's going to happen again. Even the stock market went through an incredible bubble, right? An incredible bubble. So if you think the bubble right now is big, what happens in 1 or 2 years when they come out and they do what they did back in 2020 to cause what they did in the markets, but they do it 4 or 5 times bigger? Now, the reason I'm telling you this is that's going to cause an opportunity for us to make a lot of money in the rampant bubble that will be created on the other side of people being fearful, right? People are going to be so focused on what? The forest from the short-term trading, right? It's like them. I go back to the trading analogy, right? They're focused on the daily charts right now for the last few months, but they're completely missing the picture. Oh my goodness, so bad, so bad, so bad. Fear, collapse, blah, 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 right? But you, because you're an intelligent investor now and you're not letting your emotions get involved, you're like, this is where I should be really, really, really keeping an alert out to see what's going on with the whole printing money situation. Because as soon as they start to do their thing, we're probably likely to start to see an incredible, incredible, incredible move coming out of the markets. Make sense? So we can see that through there, right? We can see a pullback and we can see that. So that's what happened. But if we're going back to history, what was probably one of the greatest investments you could have made back in the 70s? If this is a repeat of the 70s, right? If it is, and so far it's matching up quite nicely to what's coming. If this is a repeat of the 70s, what was the number one thing? By 1980, what was the number one asset that if you held through this time, you not only did well, but it did 500, 600, 700% increase? What was that? And that was the good old what? Gold and silver. Look at this here. So if I bring up my weekly charts and I squeeze my weekly charts up and I go back to the 1970s, this is the 1970s. This is gold here, by the way, guys, right? This is the 19, right? See here, gold actually ran up. Interesting. And then it actually had a pullback for a few years. This is years, by the way. 1974, 75, 76, 77. This is years. What's gold been doing for the last few years? Interesting, right? So, and then guess what? On the second half of this decade, gold went absolutely burko. When the second, so gold actually had a nice move up through here, but it wasn't a really big move. Gold actually had quite a nice move the last couple of years, but it wasn't a big move. And then we had a pullback. We've been getting a pullback in gold. Interesting. And it wasn't until the second half of the decade when inflation went absolutely crazy, when the government actually did their thing, right, caused this secondary thing to happen through here. And I know a lot of people are not going to be focusing on gold because like gold didn't do anything when the inflation was going up and blah, 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 all that sort of stuff. Okay. Guess what? The market's probably going to do something really with gold this time, okay? And if you know my story when it comes down to actually trading the markets, you would know that when the crypto mania was happened for the last few years, I kept saying, do not be touching the crypto market. If you want to buy something, just buy gold, right? You'd be such a much happier camper now if you did that. You'd be down maybe 4 or 5%, maybe 10%, not down 0, right? Especially with some of these. Did you see, what's his name? Cleary, what's his name? Oh, I forget his name. Cleary. I forget his first name. He lost. He's probably lost millions and millions of dollars in the FTX situation. Anyway, so we can see that that's probably that's happened there. And so how much of that was that of a move there from the bottom to the high? And no, you won't capture the whole lot. That was over a 747% increase in gold. What actually happened with silver? Right? Silver back in the 70s did what? Let's go back to the 70s. Look, this is what silver did. And the reason why I'm saying this, guys, is if the situations continue to do the same thing, we're likely to get the same thing, right? It's like, there's nothing new underneath the books, right? The further you look back in the past, the more you can look forward, okay? So if certain similar things do something, just like here, look at this here. Silver did nothing for a long time, right? Absolutely nothing. This was like 74, 75, 76, 77, 78, 79. Nothing. Absolutely nothing. And then guess what? We actually had an extraordinary move to the upside when it comes to silver. But again, silver went up really quickly and then down really quickly, right? So this is the time when this is actually happening, you don't get greedy, right? Just like people like with the whole crypto market, they got greedy and they got hammered. So with my positions, I'm waiting for this mania. And what was this? This was from that point through there, that was up 857%, right? So as you can see, gold and silver both did incredible moves with that. So if you can see what's likely to happen, firstly, if we go back to actually the good old stock market itself, okay, and we look at this here. This was the result of what they did back here, right? What did they do back here? They came out and jacked up the printing press, right? Jacked it up big time. And that was the cause. Okay. Oh my goodness, so bad. That was the cause. That was the effect. So as we continue doing this situation here, wherever it does, right? Wherever we go down to, right? We could end up down through. We could end up down through here somewhere, right? We could end up down through here somewhere. So if, say, for example, S&P gets to 2200, oh, John, you are absolutely nuts. That's never going to happen. Never say never, guys, okay? I'm not smarter than the markets. You're not smarter than the markets. Let the market do the talking. And every time you think it cannot do something, guess what? Ha, it does. So If we had the cause, massive printing of money, okay, and that was the effect, and then they come back here in 24, 23, 24 period, and then they do it again, but this one here, they don't do, they do, I think it was around 5 trillion this time. What if they come out and do 20 trillion this time? What would be the effect? When most people are screaming because there's blood in the streets, what's going to be the effect 1 to 2 years later? That's right. One of the greatest bubbles we've ever seen in history. Greatest bubble. This is not the greatest bubble here, right? We're going to retrace it, and then we're going to see one of the greatest bubbles. Now, this is so important because we can see what's likely to happen, what's the best investment to have. Hence the reason why I am in the metals and mining right now. And by 2030, guess what? I'm going to be a very, 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 very happy camper. So and I can't tell you what to do, but what I do is I have an investment account, and that's called the 2030 investment account. What do I do with that account? I put money in every single month, right? And then, I trade the markets, make money, trade the markets, make money, do my trading, okay, short-term trading. And then I put some of that money back into the investment account. And then I buy and hold that for 2030, right? So it's called the 2030 account. Because why? Because if history repeats itself, the last 3-4 years of this decade are going to be incredible for the metals and especially the mining sector, right? Going to be absolutely crazy. But on the short term, like that's the big picture, right? What's the short-term analysis? Short term is we could get another big movement on the downside. We could get another 20 or 30% movement on the downside in gold and the mining sector. Big picture. You see what I'm saying there? But I don't really care. Why? Because I'm setting myself up for that. Now, moving back into the short-term theory here is that if we start to see them do the exact same thing as they did back in the 2020 period, well, then we can start to say, wow, this is a great opportunity because we're about to see some incredible, incredible moves over the next couple of years. And can you imagine buying a long-term dated option and we get something like this here? We're talking, and we hold it for a couple of years. If we get something like this, but much, much bigger, we end up doing something like that. And Patrick Bet-David, and I don't know if you guys agree with this, but Patrick Bet-David, I'm sure you guys know, he said, looking at the Dow Jones, right, the Dow Jones, he expects to see a 50 or 60,000, right, coming to the recession, and then a 50 or 60,000 boom coming out of this. Leave a comment below. Do you agree with him or do you not? I sort of agree with him because if this here was the result of 5 trillion and then they do this and then they do 20 trillion, wouldn't you expect something like that anyway? Wouldn't you expect this here was 5 trillion and if they do 20 trillion here, wouldn't you expect something at least twice the size of this here, which would be up there? See what I'm saying there, guys? And this is where you can really, really, really ramp up and stuff that I'm looking at. And when you start to buy out of the money options, which are highly risky and as much time as possible, you're risking 100% of it. But guess what? If that does happen, and I'm not buying options now for this because we still probably have a good couple of years of pulling back. If that does happen, guess what? And you start to see them printing money and you start to do some long-term options for as much time as possible and long-term, right? You can start to add probably a 10 to possibly even up to a 30,000% increase in your options. Now we're talking way out of the money here, by the way, guys. We're talking, stuff that you think, oh my goodness, because if the market was down here, say the market goes down here to 26,000 and does something like this, right? Something like that. And then we go to recession, blah, 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 right? Could you imagine buying a $60 out of the money option for a couple of years and it does get there? We're talking like buying something for probably about 20 cents, right? 20 cents. And then selling it for a lot of money because the volatility is taking off. See what I'm saying there? So a $10,000 or $20,000 investment, even a $5,000 investment, again, you're risking the whole lot. But that $5,000 or $10,000 investment could be worth a few $1 million, right? To your. But it's all about what? Looking at the short-term analysis, what's happening right now, the short-term picture, seeing how it's all working, how it's all fitting into that big long-term picture. And that big long-term picture, when we start to identify this and we don't get sucked in by the media, the fears, the emotions of what the outside is saying, but we look at this from a logical point of view, we can start to connect the dots, say, so by the time 2030 comes around, you have made so much money from this inflationary situation because you are ready for it. Okay, so I hope this really helps you out today, traders. This whole thing here is my number one thing, is that I want to help you make money long term. But just remember, none of this is guaranteed, right? History is repeating itself, and I'm showing you what I'm doing. But hey, I could be completely wrong as well. Hey traders, I'm giving away 100% free access to my brand new Breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new Breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.